Whether you're a homeowner, landlord or investor, staying close to the data is absolutely key right now. Hi, I'm Ali and welcome back to Concentric TV. Today we're diving into the October UK housing and rental market updates. In this video, I'm going to be breaking down what's happening with house prices and buyer activity, how mortgage rates are shaping the market, the latest rental price and demand trends, and what all of this means if you own a property here in the Midlands or beyond. Let's dive in. First up, the sales market. Now, Rightmove's September figures show that the average new seller asking price rose by 0.4% this month, putting the national average at just over £370,000. But annual growth has actually dipped slightly negative, down 0.1% year on year. Now, that's not a sign of a crash, it's actually a sign of a more sensible competitive pricing environment. This year, it's been the realistic sellers that have been moving. Buyers are still out there, but they won't overpay. Now, when you zoom in regionally, the South is under more pressure. The Southwest is down 1.3% year on year, and in London, it's flat to slightly negative. There's also more stock on the market in the South, making it more competitive. But here's the good news for us in the Midlands and North. Northwest is up by over 3%. The West Midlands is holding steady, and homes here are selling faster with fewer days on market. This region remains more balanced and resilient compared to much of the South. Now, here's something that might surprise a few people. Even though prices are cooling, the number of sales agreed is actually up by 4% compared to this time last year. Now that tells us buyers haven't disappeared, they're just more selective. If you're thinking of selling, this is your reminder that sensible pricing gets results. The demand is still there, but the market is unforgiving to overpriced listings. Now, mortgage rates. Since the Bank of England's rate cut in August, we've seen slow but steady improvements. Average 2-year fix is down from 5.03% to now 4.52%. That's around £100 a month saving for the average buyer. And with lenders easing affordability stress tests, more buyers can actually secure finance. This is one of the main reasons transaction volumes remain solid, especially for first-time buyers who continue to drive change across the market. So heading into the last quarter of 2025, the outlook is cautiously stable. Prices are flat, but activity is solid. Affordability is improving, and regional strength in the Midlands and North has given the market a firmer footing. Of course, the autumn budget is the wild card, but for now, the fundamentals are holding up well. Average rents are still at record levels. Outside of London, it's £1,349 per calendar month on average, and London itself is £2,698 per calendar month on average. But growth is starting to ease, with annual rental inflation now at 3.9%, down from double digits a couple of years ago. Now, we're also seeing the best balance of supply and demand since 2020. Available listings are up 11% year on year, and tenant demand is down by 12% year on year. The average rental property now gets around 10 to 12 applications compared to over 20 at the end of 2022 peak. It's still competitive, but it's not the frenzy we saw post-COVID. And affordability is now the biggest issue in the rental market. 24% of listings are reduced before letting. 45% of landlords have experienced arrears in the past year, and nearly 1 in 3 landlords are considering selling up. This is why proper tenant qualification and protection, like rent guarantee insurance, has never been more important. But again, the picture varies regionally. So Midlands yields, they remain strong at around 6.7%. Tenant demand is still resilient, and void periods are shorter than the national average. This region continues to be one of the most stable, balanced rental markets in the whole of the UK. So as we head into Q4, rent growth is expected to average around 4% this year. Midlands and North should continue to outperform the South. Supply is improving, but demand remains higher than before the pandemic, and yields continue to look attractive compared to many southern regions. So to sum up, the housing market is steady, the rental market is strong, and the Midlands remains one of the most reliable places to own property in the UK right now. If you're curious about what your property could be worth in the current market, you can get an instant online valuation using the link below. Or if you'd like to access more guides, checklists and landlord resources, head over to our resource library, also linked in the description. Thanks for watching, don't forget to like, subscribe, and I'll see you in the next market update.